Good day, everyone, and welcome to another investing video on Moementum Finance channel. Today, we'll discuss what Russell 2000 Index is and review top 4 exchange-traded funds that allow you to invest in the Russell 2000 Index. We'll compare the ETF costs, number of holdings, dividend yield, and past returns, and provide you with succinct information to be able to make an informed investing decision. Of the ETFs we'll review, 3 of them are traded in the US dollars, but 1 of them is available in Canadian dollars. But what is Russell 2000 Index? The Russell 2000 Index is an index of domestic small capital stocks. The index was created and is run by Frank Russell Company, a group that manages several stock market indexes and provides other investment services. The Russell 2000 consists of the smallest 2,000 stocks contained in the Russell 3000 Index, a benchmark of the total US stock market. Morningstar defines small caps as those stocks in the bottom 10% of the total US equity market, ranked by total market capitalization. The Russell 2000 Index is a market cap weighted index, meaning that the components of the index, aka the stocks included, are included in proportion to their relative market capitalization. Investing in small cap stocks can be riskier than large blue chips companies. Small caps are often smaller companies that may only have 1 or 2 product lines. They also may not have the internal infrastructure and systems in place as with a large company. If, for instance, their main product or service line hits a snag, this could cause major trouble for the company and their shares. On the other hand, some small caps go on to become successful and turn into large cap stocks one day. Apple is the best example of this. Before we continue this video, I have a favor to ask you. I have put a lot of time and effort to put this video together, and in return, I appreciate if you can give this video a thumbs up and subscribe to Moementum channel for more investing videos. Thank you. All right, back to the topic of this video. Here are the top 4 ETFs to invest in the United States Russell 2000 Index. We'll review each of them more closely and compare their pros and cons in the next few minutes. So let's get into it. The first ETF to review is iShares Russell 2000 ETF with ticker symbol IWM, offered by BlackRock. It has over $65 billion in assets under management and an annual expense ratio of 0.19%, which makes it an appealing choice to investors on a budget who still want a piece of Russell 2000 Index. The fee of 0.19% means if you invest $10,000, you'll pay a fee of $19 in a year. This ETF consists of 2020 holdings and is showing a 5-year cumulative return of almost 81%. This ETF has a dividend distribution currently yielding 0.86% annually. Among the top 5 holdings of IWM include companies like AMC Entertainment Holdings, Intellia Therapeutics, and Crocs. The second ETF to review is Vanguard Russell 2000 ETF with ticker symbol VTWO, offered by Vanguard. It has $5.9 billion in assets under management and an annual expense ratio of 0.10%, which means if you invest $10,000, you'll pay a fee of $10 in a year. This ETF consists of 2,054 holdings and is showing a 5-year cumulative return of almost 82%. This ETF has a dividend distribution currently yielding 0.92% annually. Moving on, and the third spot to review is the Rexion Daily Small Cap Bow 3X Shares ETF with ticker symbol TNA. It has $1.9 billion in assets under management and an annual expense ratio of 1.12%, which means if you invest $10,000, you'll pay a fee of $112 in a year, making it one of the pricier ETFs that we'll review in this video. This ETF offers 3 times leveraged exposure to nearly 2,000 US small cap companies as defined by the Russell 2000. As a levered product with daily resets, TNA is not a buy and hold ETF. It's a short-term tactical instrument. Like many levered funds, it delivers its headline 3x exposure for only 1 day at a time. As a result, long-term returns could materially differ from those of the underlying index due to daily compounding. This ETF has a dividend distribution currently yielding 0.01% annually, and it's showing a 5-year cumulative return of almost 126%. Finally, the fourth and last ETF to review is the Canadian dollar hedged iShares Russell 2000 Index Fund with ticker symbol XSU, offered by BlackRock. It has $500 million Canadian dollars assets under management, or about $442 million US dollars, and an annual expense ratio of 0.36%, which means if you invest $10,000, you'll pay a fee of $36 in a year. This ETF consists of 1 holding only, which is in fact the IWM, the first ETF we reviewed in this video, but it is held in Canadian dollars and hedged for Canadian dollars. Canadian investors can easily trade this ETF in their local currency. 𝐋𝐈𝐖 is showing a 5-year cumulative return of almost 68%. This ETF has a dividend distribution currently yielding 0.46% annually. All these ETFs can be traded through popular brokerage accounts, and if you're a Canadian investor, you can use the referral links in the description of the video to open an account and get a referral bonus. So be sure to check it out. Are you currently investing in any exchange-traded funds? What are some of your favorite ETFs? Let us know in the comment section down below. If you'd like to learn more about investing in the stock market and follow the latest news about hot stocks, including penny stocks, and growth stocks, ETF investing, and dividend stocks, don't forget to subscribe to our channel. Here on Moementum Finance, we post several videos every week about investing and financial freedom. I appreciate if you can give this video a thumbs up, and I hope to see you next time.